the key events and themes we've seen in the markets this week. Let's start off in the United States with the FOMC. The key takeaways then, the Federal Reserve are to move forward with shrinking of their balance sheet as early as next month, so pulling back of their own stimulus. More of the committee were in favour of a hike before the end of the year, 11 versus July's 8, and 3 hikes are seen next year in 2018 then. So this has been perceived as quite hawkish from the Federal Reserve, quite surprising there. Weren't expecting to be as hawkish as they have done so. So we did see a large amount of dollar strength across the board, guys, but we do seem to be giving back some of those gains for the dollar. What I would say is, as I've mentioned in a few weeks, if you look at the dollar index, there's now a lot of resistance seen between the 92 and 93 area. So that is what is forcing the dollar to not be able to hold its ground. And as I say, over time, I still see this treading lower across the board against the other majors. Looking over in the United Kingdom then, so the pound has remained firm across the board after receiving a big boost last week from the Bank of England hinting hikes are to come. But in terms of data points, strong retail sales, 52nd consecutive month of growth for the retail sector. And this is quite surprising because we're seeing drastic rising in prices across the board. And in terms of average earnings in the UK, it's still quite subdued. So it surprises me just because consumers' affordability, but nevertheless, good for the economy. And elsewhere, renewed optimism surrounding Brexit. Seems those are back on track in terms of the talks. There's a government source suggesting that Britain are to pay a lump sum of money during the transitional process, still to allow Britain single market access to the EU, which is good. And just for your information, the fourth round talks are to continue from the 25th of September, so next week. So do keep that in mind, and that could help at the moment. So there's 2 cases for pound strength, and that's imminent hikes from the Bank of England and the progress now that Brexit talks and negotiations are starting to gather in terms of the momentum behind that. Asia then for the Bank of Japan. Now, there were some slight outside calls that they'll start to tighten up a little bit, but not the case at all from Bank of Japan's Kuroda. They did note that they will adjust the policy as appropriate to continue momentum towards their 2% price target, and they will continue to persistently ease in the markets to help them for their price goal. So actually, that's seen as a yen negative in terms of them remaining ultra easy, but nothing particularly new there. And still, while in the topic of the Japanese yen, well, as we know, it has been strengthening over the last few weeks or a month or so, just due to the heightened geopolitical concerns, but those have subsided slightly, eased a little bit, deflated, so that does add to the case for yen weakness across the board, guys, with the Bank of Japan and also the calming in the market somewhat on the geopolitical front. Over in New Zealand then, guys, as a polite reminder, on Saturday we do have the general elections, and as I say, it is very close at the moment between the ruling National Party and the Labour Party. The polls are very much neck and neck. There are some indicating a Labour win and some indicating a National Party win. And just as a polite reminder, seen as a positive if the ruling National Party win, and a negative for the Kiwi if Labour win initially. So do keep that in mind. We could see some gaps at the open on Sunday. So other than that, that's it from me. I hope you've had a great trading week, and I look forward to reporting the key events to you next week. Thank you.